Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, US Treasury yields fall from 16-year high as Bill Ackman ends his bearish bet. As well as that, Benjamin Netanyahu denies the split over Gaza's war strategy, so the kind of the strategy around the ground invasion into Gaza that we've all been expecting. As well as that, lots happening on the charts also, and lots coming out on the economic calendar today, but we'll come to that near the end, so make sure you stay around so you see that. But before we get straight into it, make sure to subscribe. But yeah, first thing to talk about, of course, is the US Treasury yields. Now, the 10-year US Treasury yield fell back on Monday after rising above 5% for the first time in 16 years, with the 10-year yield rising early yesterday to a peak of 5.02%, which is its highest level since July 2007. We've been talking about US Treasuries and their yields a lot recently, just as a result of the way the Fed's been shaping up its rhetoric and the way that's been affecting US Treasuries, especially with all the economic data that's coming out as well at the current time. And this has driven US Treasury yields, as we've just mentioned, to 16-year highs, and this has been across all those kind of term dates of US bonds, and yeah, they're reaching these new highs, or highs not visited since 16 years ago, so really significant areas. But that said, yesterday we did see that slip in the yields as a result of kind of bond prices coming back on themselves and gaining a bit of momentum to the upside. And this came as investors bet that the Fed would keep interest rates higher for longer. So this isn't in reference to the fall yesterday, but more so in reference to why US yields are as high as they are, and that's because investors have been expecting rates to stay higher for longer, and this came following the last Fed's meeting and Fed's rate decision, where it was kind of concluded that rates were going to stay higher for longer, if not rates even being hired later this year. And this was in contrast to the change in rhetoric from the Bank of England, the Bank of Japan, and the ECB. Now, yields did then slip from their peak, however, but this was following billionaire investor Bill Ackman saying that he was ditching his bearish bet on long-term treasuries, dropping yields to 4.85%. Now, when Bill Ackman first did announce his kind of bearish position on US Treasuries, this did help push the US Treasury yields even higher, and this is what's been helping this drive to the upside, is this continual expression by many institutional investors that the belief is poor for US Treasuries, as a result pushing up yields as a result. Now, Ackman did say on X that there's too much risk in the world to remain short of bonds, with bonds at current long-term rates, with growth being weaker than mainstream data suggesting. And this is obviously in reference to the recent stronger, robust economic data which the US has presented around there kind of being better levels of employment than we were expecting, better levels of manufacturing, with just last week talking about on here the fact that the IMF was looking at the US as one of the kind of bright spots within the global economy, as the world kind of experiences these long-term economic issues that have followed since the COVID lockdowns. Now, this belief triggered the sell-off since government bonds are a safe haven asset for investors during moments of economic weakness and market volatility. And this is largely why sometimes you might see US Treasury yields respond positively to conflicts. and that sort of thing, just because it's seen as that safe haven asset, similar to gold actually, which is, following Israel Palestine conflict being kind of reignited again, that also saw, a strong push to the upside price wise. And more recently, these bonds have seen a sell-off as a result of Fed officials hinting to a slower path towards interest rate cuts in 2024 and 2025, and the ensuing robust economic data. So this is what's really been driving US Treasuries prices to the downside and US Treasury yields the upside, because obviously those two are inversed. And as a result, that's why we're seeing what we're seeing. That's why we've seen these 16-year highs, as I explained at the start. But that said, following Bill Ackman's kind of notes on Twitter, that's why we've kind of seen this change in and fall in the yields. Now these pieces of data, referencing the robust economic data, being the higher expected than expected US retail sales, presenting stronger economic consumer performance, as well as stronger labor market and inflation data in recent weeks, and we've been talking about that as well, and that's obviously been driving its own movements within markets such as in the US Treasury yields. Now the latest volatility for Treasuries recently came after Jerome Powell on Thursday did signal the Fed was prepared to forego raising rates at the next meeting, and the reluctance to lifting rates may further force Fed officials to hold them higher for longer, with bond yields across Europe following Treasuries in movements yesterday. So this is kind of going back to what Jerome Powell did say last week, and that was kind of positive for US Treasury yields, so did push them higher, as people kind of expected rates to stay higher for longer as well. But that's all to talk about for the US Treasury yields. Definitely keep your eyes on it, as US Treasury yields are just so important. But next to talk about, of course, is Benjamin Netanyahu and the issue of Israel-Gaza conflict. Now, Israel's Prime Minister, Defense Minister, and Army Chief insisted on Monday they were working in close and full cooperation as signs grew of discord over the course of the war with Hamas. And now this is obviously following the 7th of October attacks on Israel, and now we're seeing the bombardment of Gaza from the Israeli Air Force, as we kind of expect a ground operation to occur within Gaza. And on October the 7th, obviously the terrorist organization named Hamas did attack Israeli territory, and in the process killing over 1,500 civilians, as well as taking over 200 civilians hostage. And this is what we've kind of brought about these large-scale bombardments, which we've been seeing continue over the past 17 days since the conflict began. But despite continued hints from officials that the ground operation into Gaza was imminent, no such operation has begun 17 days since the start of the war. So we are still seeing absolutely no change on the front of Israel invading Gaza in order to clear it out and rid the area of the Hamas militants, and we still haven't seen anything in relation to that, and this is what's kind of sparking this kind of confusion and questions around whether there is a strong level of discord within kind of the Israeli cabinet and war cabinet especially. Now Netanyahu and his defense minister, in order to calm the commotion around possible disagreements in their cabinet, that with their offices saying there was a clear unity of purpose. So really trying to make it clear that there aren't these large scale issues within the cabinet for Israel, and that everything is calm, and their offices kind of trying to get the media to understand that, and as a result not kind of increase this kind of matter of commotion and spread this kind of fear of a lack of stability within the government. But despite such statements, Netanyahu's far-right ally and security minister yesterday did demand the war cabinet should be expanded, as well as accusing Netanyahu of failing to see the attack coming and being complacent with his treatment of Gaza and Hamas, and this is why the far right security minister is now kind of honing in on Netanyahu and giving him a telling off, basically, with senior IDF officials reiterating recently that their forces had finished preparations for ground operations and were now waiting for the order by the government. And this is what's really been sparking the kind of questions around whether there is too much discord within the Israeli government, as people are questioning why has this ground invasion not occurred yet. What's kind of the issue for this not to occur, and this is kind of what's being blamed, is that discord between what strategy to implement on the ground invasion, because Israeli officers, military officers, are saying that they're kind of ready to go, but there's no green light from the government just yet. That said, people familiar with Israeli thinking have noted numerous factors holding up a ground invasion, such as lacking military preparedness, as well as concerns over the 200 hostages, which, if an invasion does take place, the question is what might happen to those hostages. We do know 2 have been released recently, but these hostages could be executed, or worse, or kept somewhere, or moved out the country somehow if the invasion does take place. And so there's worries around that, especially because there's so many foreign kind of hostages as well. And this also brings into question whether it may prompt Hezbollah, which obviously exist on the Israel-Lebanon border, and a kind of a Shiite militia group funded by Iran, with over 50,000 members, and whether if they do enter Gaza to remove Hamas from that area. The issue and worry is that Hezbollah will then join the war, and with officials saying that their goal is to destroy Hamas and remove it from Gaza, diplomats are saying that such an operation would involve months of combat, which obviously would be extremely detrimental to Israel, not only their economy, but also taking so many lives in the process of trying to clear the area of the terrorists. With a similar situation occurring in 2006 for Israel, when they launched a ground operation into Lebanon to destroy Hezbollah, but the war ended inconclusively, and so the worry is that once again the IDF will enter Gaza, similar to how they entered southern Lebanon in 2006, take numerous and thousands of casualties, and then end up having to withdraw as a result of that, with no conclusive kind of achievement to be proud of. And with the possibility of a more dangerous Hezbollah joining this war, is now putting the ground invasion into question, with the hostage question also adding to the complexities, of course. And thus Joe Biden has been urging Netanyahu to be cautious in any operations, as obviously US civilians are still being held within Gaza's territory by Hamas, with moves to aggressive risking broadening the conflict and casualties as well. And that's kind of the key risk here, is an escalation, as we spoke about yesterday and the week prior, is this idea of there being an escalation, bringing in numerous parties such as Iran, even the US, Iraq, Syria, as well as Lebanon, of course. And that's the key worry here. But that's all to talk about for the articles. Next to talk about really is the charts, where we have lots happening, to be honest. With firstly on US indices especially, we have seen a double bottom kind of be reached, or at least kind of occur, and this is what's happening on the US 30, so the Dow Jones. And as we can see here, the Dow Jones kind of coming out of last week did start to see a decline. We were kind of expecting, it to bounce back maybe off one of these Fibonacci areas, where there was a strong area of liquidity, but we still just have not seen that. We've just seen, this strong momentum to the downside, with, price pushing further and further to the downside, and, breaking now below this lowest Fibonacci area to where we would expect, a positive move to the upside once again. And this is, reaffirming the kind of image which is very poor for US indices, of course. And, the question of why this might be could be put down to either, Jerome Powell's kind of rhetoric last week around rates staying higher for longer, which has then pushed price to the downside as people start to price in those higher rates for the US stock market, or even, the escalations within Gaza, which the conflict first started on the 6th of October. And as this conflict lengthens, the worry is that more parties, more states are brought into this conflict as well, risking further escalation and damages to the global economy, including the US, of course. So definitely keep your eyes on US indices as we kind of reach this double bottom. Arguably, you could say we've already punched into it, but then, if you were there to adjust the kind of double bottom, you could say it's even further lower. So definitely keep your eyes on US indices as, the market begins to shape up. But next to talk about, of course, is the dollar. Now, the dollar has reached this double bottom, and this, arguably could be put down to Jerome Powell's rhetoric last week as well, which did kind of talk about how rates weren't expected to go higher, but possibly held higher for longer. Now, this might seem kind of it doesn't really make sense, because it's pushed US indices down to the downside because people are expecting rates higher for longer. So, people are expecting those higher borrowing costs, but then dollars somehow falling when we're expecting those higher borrowing costs as well. But this could arguably be put down to the fact that, if rates aren't going to go up further, this does bring down the dollar, because this means that people aren't able to price in that higher level of interest for the dollar, which would be earned as soon as the rates come up, and then that starts to be factored into the bank's kind of deposit rates, in contrast to what kind of longer rates for higher rates for longer would, and how that would affect US stock markets is that it would stunt that kind of growth, with borrowing costs being too high for too long, rather than maybe rates just going up high for a short period of time would still push up the dollar, because that's benefiting those holding their money, hot money, within US checking accounts. So definitely kind of keep your eyes on the dollar as we reach this double bottom. The question is now whether it will respond to that area. Obviously, we've broken below this area, this trend line, and so kind of the expectations is obviously a more bearish movement now that might occur, in line with the kind of head and shoulders pattern which did form. But we still haven't really broken this neckline, so definitely keep your eyes on that as the market begins to shape up for the dollar. But next to talk about is Euro USD, which has broken its prior highs. Obviously, with the dollar falling, this has driven Euro USD to the upside, and once again back into this area of liquidity that we had highlighted prior. But yeah, it did break above this prior high, which we did kind of say was going to be a strong area of resistance. So obviously it is very key that now the Euro USD has broken above that and is now nearing this fib extension level of minus 27.2. So definitely keep your eyes on that as we near that kind of level. And the question of how high can Euro USD then go from this area does come into question, because after all we had been trending for quite some time to the downside on Euro USD, and now with this kind of change in rhetoric from the Fed around a possible rate hike later this year coming into question, this may cause Euro USD to continue to the upside. But definitely keep your eyes on any US economic data, as this will help shape Euro USD's moves. But obviously we have the ECB's President Lagarde's speech tomorrow, and obviously as she is so influential to the ECB, that'll be very important to understanding the way the euro may move for the rest of the week. For the future, sorry. So definitely keep your eyes on Euro USD and the speech tomorrow. But next to talk about shortly is pound yen. We did talk about how it was ranging around this area, accumulating, not really doing anything, but from that area it has seemed to now make a move to the upside from this 38.2% Fibonacci area. So definitely keep your eyes on whether we can break those prior highs, because for now we have been stuck under this trend line, which had acted as a strong area of support prior. But next to talk about is Bitcoin, which has taken a strong rally to the upside following speculations over there being positive news for the Bitcoin ETF. Now, very, very long ago, well, maybe 35 days or 35 videos ago or something like that, we did talk about, the kind of SEC making their decision on whether a Bitcoin ETF would be formed. When initial speculation came out that, Bitcoin ETF would be formed, the SEC would approve it. We did see this spike in Bitcoin, but when people kind of saw that it wasn't going to happen, it fell back to the downside, and we were kind of ranging around for quite some time. But since then we have seen a really strong push to the upside as people start to begin to believe that an SEC approval for a Bitcoin ETF is likely. And this is what's caused such a push to the upside after all moving from these areas, but a lack of retracements taking place, which is obviously hinting to a possible move to the downside coming soon if we do kind of form this bearish kind of divergence on the RSI. So that's something you should keep your eyes out on, just because we're becoming so overbought on Bitcoin with such a strong rally to the upside. It's likely that we will see a retracement soon, no matter the news, to be honest. So definitely keep your eyes on that. But next to talk about is gold, which despite seeing a rally since the start of the Gaza conflict, it has yesterday kind of stunted after reaching this area of liquidity that we noted, this strong area of resistance, which had formed as a double top, and prior area of resistance as well, as you can see here, just going back in time, and so we failed to break above that area really well. We have spiked above it, but now we've kind of accumulated and sat around that area. So definitely keep your eyes on that, on whether it is able to continue moving further to the upside, or in fact it will now retrace a bit before gaining the liquidity to continue a move to the upside maybe. So if we just put on some key areas of the charts on the Fibonacci area, on the Fibonacci retracement tool, 50% Fibonacci area does stand out to me there, with a strong area of resistance running in line with that. So definitely keep your eyes on gold as it looks for a possible retracement move. But that's all to talk about on gold. Next to talk about is US Treasuries, and this is just to highlight that fall that we were talking about on the US 10-year yield, as it did fall from 5.022% as its yield breaking above that 5% mark, which was very significant. But since yesterday it did have that fall, so possibly it's just a retracement, and that's very likely. It was just a retracement, and now it's ready to move higher, so definitely keep your eyes on that. But next to talk about is Brent crude oil, which although has been kind of in this upward channel, and this trend line's been proving significant, it has broken below that area, so it is now coming into question whether it will now break hook and go to the downside after breaking below that trend line. So definitely keep your eyes on Brent crude oil as we start to produce more bearish kind of price action signals, so definitely keep your eyes on that. But that's all to talk about on the charts really. Next to talk about, of course, is the economic calendar, with lots of data coming out today, with firstly German consumer confidence data coming out, as well as UK unemployment rate and employment change figures being released. As well as that, we have multiple European manufacturing and services data being released, and that's lots and lots of data. So we have French, German, and the general euro area, as well as Polish unemployment rate. As well as that, we have the UK manufacturing and services data as well, along with the ECB's president Lagarde's speech, which we did talk about in the articles, so definitely keep your eyes on that. As well as that, we do have US manufacturing and services data being released, so lots happening today, lots coming out on the economic calendar. We've covered lots on the articles and lots on the charts. Have a great trading day, but that's all from us at Wildwood Capital. See you later. Bye.